The Orlando apartment market continues to see slow but steady momentum, and looking over the next 12 to 24 months, this is certainly one market that could have some upside potential. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Orlando update. The Orlando economy is finally showing some signs of life. More than 20,000 jobs added annually through Q4 of 2012. That's the best growth seen here in more than 5 years. And it continues to be driven by that key leisure hospitality services segment. Obviously, Orlando is a big tourist market. But what's been encouraging of late is that we're starting to see growth in other sectors of the economy as well. And that includes construction, business professional services, and trade. And as a result, apartment occupancy rates have been slowly climbing up to the point where they're now in good shape again. Occupancy as of Q4 came in at 94.6%. As you can see, a little bit of seasonal easing in the quarter, but up 80 basis points year over year. And you can see from this chart that 94.6% is still below those peaks that we saw in the mid-2000s. But remember, back then we were seeing lots of apartments being converted into condos, and so the declining inventory levels are what really drove up occupancy. And so in the bigger picture, 94.6 is actually quite good for Orlando, especially when you consider the large amount of shadow market inventory in Orlando. Lots of privately owned single-family homes and condos that are offered for rent. And let's look at rent growth in the apartment market and like occupancy. On the surface, these numbers may not jump out, but given the headwinds that the market is facing, they're actually not so bad at all. 5 straight quarters of annual rent growth in the 3 to 4% range, 2.8% in Q4. But that's off the U.S. norm by just 20 basis points, even though Florida has been much slower than the rest of the nation in working through its large block of foreclosures due to our state's requirement that foreclosures go through the court system. And that's significant because it means that the Florida markets continue to see lots of distressed housing coming onto the market, and that means a steady stream of investors buying up properties just to rent them out. And it also means that prices, which are still far below pre-recession levels at the bubble, are now very affordable to apartment renters, or to most of them anyway. And sure enough, we are seeing lots of activity in the for-sale housing market. So here's another headwind in addition to the shadow market. Some numbers for you from the local Realtor Association. Sales through November were up 19.9% year over year. Prices up 12.2% year over year. Now, again, lots of that is being driven by the investment side, but we are seeing more apartment renters leaving for purchase. But what's been encouraging is that occupancy rates continue to climb. Now, what we tend to see is that when the local for sale market is unsteady, just showing sharp ups and downs, that tends to lead to some sharp ups and downs in the apartment market as well. And we've seen that in places like Phoenix and in Tampa, and Atlanta's an apartment market with its unsteadiness on both sides also. But in Orlando, the numbers have actually been pretty consistently solid, and that bodes well going forward, especially now that the economy is showing some pretty good growth, and that apartment construction, while increasing, is expected to remain pretty moderate. So our baseline forecast has occupancy climb back up to 95% and for rents to climb 3.4%. Some good numbers, but Orlando is a market that has some potential to outperform expectations. And that wraps up for Orlando. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.